Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for large cap growth and one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex. He is with the Nasdaq Index Research and Development Team with Nasdaq Investment Intelligence to discuss Nasdaq-100 valuation versus long-run trend and sales growth. Mark, it's great to see you as always. Welcome to Trade Talks. And let's take a look at your first chart here with first half performance with the Nasdaq-100.
Thanks, Jill. Great to be here as always. I wanted to show folks a visual of what the first half looked like at a constituent level for this index. There's been a lot of superlatives thrown around. Worst first half of a year, not just for this index, but for a lot of indexes. I think the S&P 500 clocked the worst first half in over 50 years. Fixed income also having just, historically bad start to the year. So not an outlier in any sense for the Nasdaq 100, but I did want to highlight that we did see a few pockets of strength. There were 15 constituents actually that pulled out positive returns for the first half of the year. Not really any of the biggest names in the Nasdaq 100 that we often talk about here. In fact, one of the biggest names, Alphabet, aka Google, was down 24.4%. That's actually the median loss. That's the median return for a Nasdaq 100 constituent in the first half of the year versus the index being down just over 29% in the first half. But we did have a few pockets of strength. You can see Vertex on here was up very nicely, 28%. A couple other healthcare names did decently. Amgen, Cgen had some good headlines around a possible acquisition late in the quarter in 2Q. And then you had also names like T-Mobile, Kraft, a couple Chinese names, a couple consumer staples names as well, participating in some of those areas that outperformed. Because again, the story this year has not been about really so much as what's going on in top line and bottom line growth. It's what's considered to be, most resistant to inflationary pressures, to recessionary pressures, even more so. You can see the tail of this chart is very, very long, all the way to the very bottom on the right-hand side, a loss of 71%. That's Netflix, just a really insanely poor first half of the year for Netflix, which hasn't really even reported that much of a slowdown, just kind of a pause in its subscriber growth, but that's enough to really punish a name that's been flying high for a very long time.
So, Mark, when we talk about inflationary pressures, let's take a deeper dive and see how the sectors individually performed within the Nasdaq 100.
Yeah, so this view shows you what's the average sector weight in the index. We use ICB industry to define sectors here at Nasdaq, so maybe a little bit different from something like an S&P GIX, but pretty close otherwise. You could see the technology was by far the biggest at just about 58% average weighting for the first half of the year. And even though technology's garnered a lot of the bad headlines, right? If you look on the right-hand chart, its contribution to the index return is pretty much right in line with its weightage, right? You could see the contribution of that return, the size of that pie in the chart is pretty much identical. The second biggest area, consumer discretionary, which does have some of those other kind of techie names like Amazon, also down, also pretty close to its weightage in the index. So you're not really seeing too much in terms of sectors outperforming or underperforming relative to their weightage, relative to how much you would expect to contribute. It's just that most things were really down, and the few areas of strength were parts of the index that just tend to be very small to begin with. Things like utilities. We had a couple power companies that were up in the first half, and some of those consumer staples, as I mentioned. But really, almost every sector, really with the exception of utilities, which just barely eked out a positive gain, were also negative in the first half.
Right. And Mark, in addition to the performance headlines, the valuation reset really has been key for the first half of 2022. And certainly, what's going to trigger a recovery in the back half of 2022, if possible, if investors are comfortable with where valuations are right now.
Yeah, for sure. If you look at this last chart that we've got up here, I think it's a really useful one to have a longer understanding of the trends here. So the blue line, that's the growth in the per share sales, right? Per share revenue at an index level. You can see that blue line was growing fairly steadily and then kind of had this step up function in early 2020 when the pandemic hit. That really coincided with the gray line, the NDX price, the index level, having a big step up as well and really kind of getting a little bit ahead of itself, I think we can say pretty fairly now. But it was, at the time driven by this kind of acceleration in a lot of the underlying trends that were helping fuel the NDX growth over the past decade. That has since really cooled off. We're still seeing top line, bottom line growth in the index, but not necessarily at the same pace. And then you've seen the normalization in the green line. That's the PE, right? Where we've been in that range of, call it 20 to 30, mostly in the lower to mid 20s for most of the past decade. We're right back there after taking a brief detour above 30. So, in terms of index price going down, it's been, around 30% so far with this correction. The valuation is corrected down by somewhere around 40%, right? Because earnings have still been growing over this time period. So the correction, I think, is even more impressive when you consider just how much cheaper the index is now than it was a year ago. I would say we're probably closer to the end of this now than the beginning, unless there's really a market deterioration in the kind of fundamental economic environment that, starts to get the earnings and revenue numbers revised downward. But pretty encouraging to see how quickly this is normalized.
Yeah. All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.